Late last year, in 2025, I brought on executives from both Dolly Varden Silver and Contango Ore to discuss a proposed merger. These are mining companies based in British Columbia and Alaska. This is significant news because we haven't been getting a lot of M&A news in the mining sector recently, at least not compared to 2011, the last cycle peak. So is this a new cycle peak? This is what investors would like to know. Does that M&A deal signal a peak or just the beginning of another bull rally? And why haven't we been getting a lot of M&A deals? And what does this deal signify for the entire mining industry? Well, the merger is now complete. The new company is called Contanco Silver and Gold Inc., trading on the NYSE American under the ticker CTGO. Shawn Khunkhun, president, and Rick von Nieuwenhuyse, CEO, will join us now to discuss what's next for not just their company, but the entire mining industry. Welcome back to the show, gentlemen. Good to see you again, Shawn and Rick.
Great to see you again, David. Yeah, good to be on the show.
This is the news release that I want to leave on the screen as we talk about how this deal finalized. When I had you on in late 2025, the two companies, Dolly Varden and Contango Ore, had just announced a proposed merger. You were waiting for shareholders to vote, and you have completed this process. So following receipt of all required shareholder and crude approvals, an application has been submitted to the Toronto Stock Exchange to list the Contango shares as defined below. So tell us about, first of all, what this merger means for not just yourselves, but the entire mining industry. We don't see a lot of mergers and acquisitions currently. There's been a few big ones over the last year, but when I speak to miners about the current M&A environment, it doesn't seem like it's a super hot environment compared to, let's say, 2011. So what does this merger signify, you think? Maybe I'll start with you, Shawn.
Well, I think what it symbolizes for the two shareholder groups is that you've taken two really strong businesses. Like, what I like to start with is you've got to examine where we were. You mentioned 2011. That was the peak of probably the greatest mine finance market of the last 100 years. That was 2011. So like the end of any great market, it ends with a flurry of M&A activity. And I think the fact that you don't see that same level of M&A activity tells me we are a long ways the way from the peak of the next cycle, number one. Number two, we've gone through a 15-year bear market. And in that bear market, there has been a consolidation of the large miners. So you've got these $100 billion mining companies in the case of Agnico, Newmont. You've got these super majors. And then there's this monster vacuum, and there's a sea of small juniors. Contango and Dolly Varden over the last 5 years were successfully growing out of that pack of juniors. Rick and I independently grew our companies from companies that were measured in the tens of millions of market cap to hundreds of millions. And we've come together to create the next mid-tier producer. North American focused on high grade. So we're looking to fill that void, that vacuum, which is super majors, and you've got juniors. And so it's an exciting new entry into the mining arena. High grade, precious metals focused. So you've got high grade gold mines in Alaska. You've got an exceptionally high grade primary silver asset with a gold byproduct in BC. You've got cash flow. You've got a pipeline and a strong emphasis on continued growth through exploration.
So it's a merger, not an acquisition. Rick, maybe you can comment on the deal itself and what percentage of the company prior shareholders of either Dolly Varden Silver or Contango Ore will own in the new company.
Yeah, so it was always contemplated as a merger of equals. And from my perspective, we had a solid gold portfolio, but we didn't have a lot of exposure to silver. And what Dolly Varden brought was that huge silver exposure and a lot of exploration upside as well. So shareholders, it's roughly equal from both sides in terms of the new makeup of the shareholder base. Obviously, there's been a lot of trading since the merger was announced. Merger closed last week, or I guess earlier this week, and was 99% approved by both sets of shareholders. So, we have strong shareholder support to do this merger. I think the common shareholders see that what we're doing here is building, as Shawn described, a new mid-tier North American focused gold and silver producer. There aren't many of them. So we're somewhat occupying a bit of a unique space, but I think one that will attract a lot of attention from the investment world.
Shawn is president and Rick is CEO. Can you just define your roles within the company? I think investors would like to understand the new structure of management.
Yeah, I'll start and just say, I'm a geologist by background, so Shawn and I were just doing another interview, and I was described as the rock guy. So that's what drives me and what I'm passionate about is exploration and mining. I've been in this business well over 40 years. I've worked all over the world. I grew up in Alaska. I know BC. We worked in BC a lot. So I love the jurisdiction we are in geologically, just huge amounts of potential. We have 4 districts under in the combined company now, Contanco Silver and Gold. So we see huge exploration upside in each of those 4 districts. But we're starting with a company that has over $100 million of cash in the bank. US dollars. We're generating on average over $100 million of new cash flow a year from our Manh Choh operation. And we have a very aggressive exploration program to execute this year. We're actually already executing. We're drilling at Lucky Shot. We'll be drilling there all year round. And then we'll be drilling at Kitsault in a very significant way starting in probably June. So that's my role. I'll say it's more the technical guidance of the company and growth.
Shawn, I'll ask you this question that's been on a lot of people's minds. Investors are concerned about whether or not this is the cycle top for silver and gold and all metals. We're seeing a retracement in prices for silver, gold, copper, and a lot of other precious metals as well. And people are wondering whether M&A activity has traditionally, and especially this cycle, signaled the top, because that's exactly what happened in the last cycle. Whenever we see more M&A, it usually means that people are closing out deals when prices are high, and then we have a top. Can you comment on that?
I think it's really simple. Why do investors buy precious metals? Why did gold become very topical in from the period from 1971 to 1980? Why did it run from 2000 to 2011? Why was it hitting all-time new record highs in every currency in January of this year? And I think if you look at all those reasons, whether it's high debt levels, insecurity, instability throughout the world, a hedge against systemic risk, a hedge against inflation, all those same reasons persist today. But if you study gold moves and silver moves, you've got to digest these moves. And it's just healthy in any market. If you look at that 1970s market, gold ran from $35 to $200, and then it corrected to $100. It had a 50% correction throughout that bull market, and then it went on from $100 to $800. So I think if you look at the fundamentals, have we solved the debt issues globally? Are the sovereigns, are the balance sheets in good shape? They're not. We're spending more money on debt servicing at a federal level than we are any other line item. So I think all the reasons investors have flocked to gold are actually more relevant today than they ever had. But what you have to appreciate is we were coming from a $2,000 base price and we ran to $5,500. We had one of the best performing years in history for gold. And so I just think if you study the fundamentals are telling me that we're no longer in the first or second innings, but we're a long way away from the end of the game.
Rick, you're a geologist by background. Tell us about the shrinking silver and gold deposits that people have been talking about for years. What happens once we've reached peak gold? Or have we reached that critical turning point already?
I don't believe in the concept of peak anything, frankly. What it results in a very real way is lower and lower grades. And that we are for sure seeing across the board on average. A typical gold project now would be somewhere between an open pit gold mine, somewhere between half a gram and a gram. In fact, I've heard 1 gram gold deposits being described as high grade. And it's the same for copper. And the whole industry has suffered from a lack of investment since 2011 in this last cycle. And exploration is getting deeper. It's getting more challenging from all the easy stuff for the most part has been found unless you want to go to a very high risk jurisdiction, which brings other issues. So from an exploration standpoint, this is one of the reasons why we focus on high grades. Putting a 100 million ton 0.5 gram gold deposit into production is a lot of work. It's huge amount of capital and a lot of execution risk. Putting a smaller high grade 500,000 ounce, half ounce gold project into production is a lot easier. It's a lot less work, and it's a lot less capital to develop. And that's the kind of portfolio we have. Now that we control 4 districts, so we have lots of exploration upside, but you don't need to have the 100 million ton of ore defined as a hurdle to get over and convince people that you have enough gold to attract the capital. So it's a very different approach than the DSO, the direct shipping ore model, is very different from what everybody else is doing. And so that's it requires that you have high grades. It does require that you have a transportation component and a tolling arrangement. And those are things that, we have got. There's plenty of excess capacity in the world today to process ore. And you just have to have the goods to be able to deliver into that. And that's why we focused Contango on this DSO model. And we've got 4 districts that can demonstrate that it works.
Rick, just to follow up on that, this leads me to my next question. Given that you have a vision or a defined outlook for what the mining industry will look like and what is required for mining companies in the future, we just talked about what the future of grades might be. How does this future fit into your strategy of merging with Dolly Varden Silver? Contango ore was already a producing project. Dolly Varden was in the exploration phase. So why this merger and why now is my question to you, Rick.
So I think fundamentally it brought high-grade silver to our gold-dominated portfolio. We like silver. We think silver is a great metal. Silver investors, there's very few primary silver mines or projects in the world, and Dolly Varden certainly represented that. And it's not a deposit. I describe the 5 known assets in the Kitsault Valley as a string of pearls. And there's kind of a center of gravity on the north end with the Homestake and Homestake Silver, and then on the south end with Dolly Varden and the Wolf Vein and Torbrit. That's where the silver is. It tends to get more gold rich at the north, but in between there's just a huge amount of exploration upside. And in fact, all these deposits are still open at depth and along strike. So, I would say fundamentally it was high-grade silver. And the fact that they're polymetallic deposits, that's where the real synergy with Johnson Tract comes. They're both on the water. They're both access to the ocean. So you have the cheap form of transport to an existing mill where it can be toll processed.
So, Shawn, my next question is for you. How did you convince Dolly Varden investors that this merger was going to add value to ultimately their portfolio? If I wanted, as an investor, if I wanted exposure to a pure play high-grade silver company, well, I had Dolly Varden to begin with. And if I wanted exposure to a gold company, I had Contango Ore or a list of other gold companies. Why combine them and have a mix of metals in one company? Because as an investor, I have the flexibility to expose myself to both separately.
It's a great question. And I think the precedent has been set by the biggest and best silver mining companies that are in existence today. So if you look at the market and you look at companies like Pan American, You look at Coeur, you look at Hecla, First Majestic. These are all companies that are polymetallic producers. Some of them may be silver dominant, but every silver mining company that's large and that's producing at scale has leveraged gold production or base metal production to focus on building an inventory. So I went to my investors who were wildly bullish on silver, and they were right. When they first became investors in Dolly Varden, silver was sub $20. We saw silver go to $120. I'm quite bullish on the prospects of silver, but the key was, how do we move the silver off the hill, right? And we're now in a price environment where I believe it's going to be very economic to once again see silver production in the Kitsault Valley. If you look back historically, David, the Dolly Varden silver mine was the richest silver mine in the British Empire when it operated. The Torbert mine was Canada's third largest primary silver mine. We're moving back into a price environment, and because of some recent discoveries that the company had made, where we've built up enough of a mineral inventory. But what Contango really brought is they brought cash flow, they brought team, and they brought a complementary asset base. So now we have the cash flow to fund the development, and we have the team that can push forward the studies and move us from advanced explorer through development and into production. And if you look at the whole package, today I can talk about 65 million ounces of silver and 2 million ounces of gold throughout the portfolio. But one of the major catalysts that's coming is a new MRE, and we're doing some big exploration meters this summer. So we're hoping that 65 million ounces is going to grow. We're hoping the same happens in the gold portfolio, but it's really about a company today that's valued at about $600 million US, has $100 million in the bank, right? Is on average cash flowing about $100 million a year, and reinvesting that capital to increase production. So we're currently, moving from a 60,000 ounce a year producer, and we've got a path to 100 and then to 200,000 ounces of gold production. And by introducing that silver component, you're going to complement the 200,000 ounces of gold production with 5 million ounces a year of silver. So that's what investors have to look forward to. And what's really unique here is it's all going to be self-funded, through treasury and through cash flow.
And one follow-up to that, Shawn. Now that Dolly Varden Silver and Contango Ore have come together to become a mid-tier producer. You're no longer explorers and developers. You're still a developer. You're mid-tier at heart. Does that change your profile for risk as companies? I've seen as companies grow and mature and also increase by market cap size, they usually go through this phase of de-risking certain projects because that's what investors demand. Can you comment on that and whether or not that applies to you?
I think what I'm focused on right now is, I've said this before, the stock market is about growing, right? And whether you're Nike, your Tesla, or your Contango Silver and Gold, I think because we're emphasizing the growth of the exploration properties with a strong commitment. We're investing as much in exploration as companies that are 10 or 20 times our size. And it's because we've been rewarded. If you look back at the previous years, both Contango and Dolly Varden individually ranked as a top 10 explorer in North America for gold intercepts, for silver intercepts. So we've been rewarded. So we're continuing to grow. We're continuing to develop. And, we've come up with a disciplined approach to harness that treasury and to methodically move the Lucky Shot back into production. That'll generate even more cash flow. That'll enable us to develop Johnson Tract. And as we move and as we grow the production profile and continue to develop, so I think there is a way to create a company here that is continuing to grow, but doing it through cash flow.
Rick, what's your
please? I'm sorry, Rick, I could just jump in on that de-risking question, because that is basically what I described earlier. Is what we have to do now is execute, and we have to execute to our plan. Each project's at a slightly different stage. At Lucky Shot, for example, we have an objective to define 400 to 500,000 ounces of resource. We're well on our way there, and then we take that resource and we put a mine plan and a transportation plan and a tolling arrangement together. And then that's an execution plan then to produce another 50,000 ounces of gold a year. So that, and we're doing that at Johnson Tract, and we're doing that at Kitsault. And so each one of these projects has an execution plan to continue to advance it. And the way I would describe it is we're basically stacking Lassonde curve discovery, this discovery part of the Lassonde curve, because that's the exciting part of the Lassonde curve. The backside of the Lassonde curve is kind of boring and can take a long time if you have a single asset company. We have a multi-asset approach. We have 4 districts that we're exploring. And again, as we've talked about, we have the cash, we have the cash flow, and we have the team to execute. So to me, that's what execution is all about.
And following up, Rick, so Contango Ore was already a producer. You have experience as an operator. What attracted you to the Kitsault Valley, specifically Dolly Varden's project in the Kitsault Valley? From a geologist perspective, you must have seen that Kitsault and the Golden Triangle area had the potential to actually go into production. What about Dolly Varden Silver's project attracted you the most?
And it's great. It's always about grade with me. If you look at our past successes with whether it's with discovering Donlin, a huge but relatively high grade gold open pit gold project at 2 grams, 40 million ounces at 2 grams. That's a great discovery. With Trilogy, we had high grade VMS deposit and a high grade carbonate replacement deposit, more on the copper side, but again focusing on quality. And that's what we saw in the Kitsault Valley with Dolly Varden's assets. I described it earlier as a string of pearls. Huge amount of exploration upside still. Just on the 5 deposits, each one of them is still open. And then, as I described earlier, you've got sort of the Homestake nucleus to the north and the Torbrit Dolly Varden focus to the south. But in between, there's 10 kilometers that are virtually unexplored, not underexplored, but unexplored. So there is a lot of exploration potential, which for me as a geologist, that's always exciting. But key, it's great. And Dolly Varden just delivers on the grade side. We
have a few minutes left, so let's, under 1 minute or less, tell us about what you plan to do with the $100 million you have in the bank. Shawn, I'll start with you. The first thing that you're going to do after the merger.
First thing we're doing, well, we're doing a number of things simultaneously, David. So we've got an ongoing drilling program at Lucky Shot. That drilling program has already yielded a new discovery. On February 25th, the KM vein was announced, 60 grams of gold over 6 meters. So there's an ongoing exploration program at Lucky Shot. We've got a new mineral resource estimate coming from the Kitsault Valley. On the back of that new mineral resource estimate, we're launching into a 40,000 meter drill program. Simultaneously, we're advancing Johnson Tract. I would describe the work there as permitting and infrastructure improvements. So, and this is all happening. The pipeline is being advanced as we've got the cash flow coming from Manh Choh.
Okay, Rick.
I think Shawn talked about everything. The immediate thing that I'm really excited about is the mineral resource estimate for Kitsault Valley, and then we'll use that to help guide this year's exploration program, the 40,000 meters that Shawn mentioned. There'll be a section of that'll be dedicated to infill, expanding high grade zones, and then some dedicated to new exploration as well. So. It's going to be a very busy year of catalysts, a lot of milestones to achieve, and you don't find ore bodies without drilling, and we're going to drill a lot this year. I think we got about 60,000 meters of drilling planned.
All right. Thank you very much, Shawn and Rick. Congratulations, gentlemen, on the merger, and we'll follow up again soon. Take care for now.
Thanks for having us.
Thank you for watching. Don't forget to like and subscribe and follow Contango Silver and Gold for more updates. Link down below.